Hello, this is our weekly market alert video for December 30th, 2021, our last market alert video of the year. And I want to wish everybody a fantastic, happy new year. And we're going to talk a little bit about planning for 2022 in this segment. And so we might as well just dive right in. First of all, I want to thank you for watching. We have had almost 300,000 views of our videos, and it's remarkable, and I can only say thank you for your support, for watching, and I encourage you to share this video with as many people as you'd wish to receive our message, and hopefully we can help them to have what we want for you, which is that you have financial peace of mind, that your money lasts as long as you do, and most importantly, that your retirement is your second childhood without parental supervision. We want you to go play and have fun and enjoy and all of that for you in the coming year. So what could cause next year? And by the way, every year, as you know, we have our Fearless Forecast. And last year, our Fearless Forecast was for Dow 35,000. And sure enough, it happened. And so we're going to have our Fearless Forecast for you next week. So I'm going to tease you a little bit, give you a reason to watch next week's video for our Fearless Forecast for 2022. It's going to be a good one, best one ever. So let's talk about what could happen next year. And one of the most important entities that we should watch, of course, every year is the Federal Reserve and what their actions are, what they say they're going to do, what they actually do. And as we look back at history, what we can see is that many of the biggest and baddest bear markets, recessions were caused by Federal Reserve mistakes. And, you know, much as we would love to think that they are infallible, that they always get it right, they are people after all, and they are looking into their respective crystal balls, and they are trying to project what's going to happen and act accordingly. And since none of us are perfect at forecasting the future, they can make mistakes. And so, as you know, they've talked about they're going to raise interest rates 3 times next year, and they're also going to be tapering even faster than they were before. So we're going to talk about that. But let's go back into history and let's look at the last or the big bad time that the Federal Reserve raised interest rates and what happened. So let's go back to the Great Depression. And just before that, the Federal Reserve raised interest rates as the economy was suffering. Now, the logic back then was that if interest rates go up, then people will get more interest on their money. And if they do, they'll have more spending power. And if they do that, they'll stimulate the economy and we'll work our way out of this terrible recession that we're in. Well, that didn't work. In fact, the opposite happened. And as many historians look back at that, they blamed the Federal Reserve for that. They raised interest rates when the economy was not good, essentially pouring gas on the fire and causing the Great Depression. Because while interest rates were higher for people who had cash, the rest of the economy got slammed and we went into the Great Depression. So, does that mean that we're going to have a Great Depression next year again because they're raising interest rates in an economy that appears to be not healthy? We don't think so. In fact, the opposite is the case. The economy seems to be healing. Jobs numbers are looking to be better each time we get reports about unemployment. And so all of those are showing us that we're healing from the pandemic. We're hopefully getting back to some semblance of normalcy. And that should bode well for companies to make profits. And as you know, we believe that profits drive prices and prices drive the stock market. So we still see the future as being bright. And as I said, I will have my Fearless Forecast for you next week. Having said that, though, the Federal Reserve are human as we are, and our forecasts are not always accurate and sometimes are wrong. That being the case, as always, we believe that having a strategy to protect ourselves from the unknown, from the things that could come out of the blue that we did not expect, is paramount, especially for those of you who are retired or retiring soon. And so our Invest and Protect strategy is there to help us to mitigate the downside as we did last year and as we've done in prior years, and we will do in the future. So once again, I want to wish all of you a very, very happy new year. I want to thank you for being a client. I want to thank you for watching these videos. I want to express to you the gratitude from everybody at RPOA, Retirement Planners of America, for all that you've done for us. You are fantastic. You're the greatest gift we could ask for. And our goal is always to give you that peace of mind. And if we're doing that, then hopefully we're giving you something in return that you value. So again, thank you. And we will talk next year.